A very good morning and a warm welcome to the esteemed speakers, distinguished dignitaries, experienced professionals from India and abroad, members of National Insurance Academy alumni community, members of the media fraternity, my colleagues and dear students of NIA's postgraduate management program. I, Ruchika Yadav, Research Associate at National Insurance Academy, and Dr. Shalini Tiwari, my faculty colleague, are delighted to welcome you all to the fourth edition of the NIA Swiss Re Seminar on Mitigating Emerging Risks through Innovative Solutions.
Good morning, ladies and gentlemen. How safe are we? This was not a matter of big concern or a question in the modern world until the pandemic broke out. Individuals viewed risk as a random threat. Now, most people across the world can see risks as the sword of Damocles that Cicero, the Roman philosopher, talked about. Not just the traditional threats, many new risks are being experienced by the society, making it very vulnerable and concerned. Through this seminar on the theme Mitigating Emerging Risks through Innovative Solutions, we have endeavored in discussing the emerging risks and how to mitigate them, equip society in improved handling of the uncertainty with the help of highly learned and experienced speakers.
The day-long seminar includes many interesting topics and rounds of discussion. We will have the inaugural session now, which will be followed by 3 rounds of panel discussion. Without further ado, I request the Director of National Insurance Academy, Mr. G. Srinivasan, to present the welcome address. But before that, let me give a brief introduction of Sir. Mr. Srinivasan assumed charge as Director of National Insurance Academy in the year 2018. After having a distinguished career in the general insurance industry, both in India and overseas, spanning over 39 years, he has served on the boards of various reputed organizations and holds the distinction of being the longest serving CMD among all the public sector general insurance companies. A recipient of the Personality of the Year Award by Asia Insurance Industry Awards Singapore, Mr. Srinivasan has also led the New India Assurance Company's Trinidad and Tobago subsidiary at Port of Spain as Managing Director. With this brief introduction, I request him to kindly present the welcome address.
Thank you, Dr. Shalini and Ruchika, for the introduction. Good morning to every one of you. Let me at the outset have a great pleasure in welcoming all the participants to this international seminar, the 4th international seminar organized by National Insurance Academy and Swiss Re. Mrs. T.L. Alamelu, Member Non-Life ARDAI, Mr. Hadi Riachi, CEO of Swiss Re India, eminent speakers in various panels, my colleagues from National Insurance Academy, students, and other participants, media. Let me have great pleasure in welcoming you to this seminar. This is the 4th in the series of seminars organized by National Insurance Academy in collaboration with Swiss Re on an annual basis on subjects of varied importance for the insurance sector. As has been the case with our previous events, this event has also attracted a lot of attention, and I'm sure that a lot of participants would be benefited by the proceedings of this seminar. The theme of the seminar is Mitigating Emerging Risks through Innovative Risk Solutions. It's a very important topic as the world is going through a lot of changes, uncertainties. We have kept our focus on 3 key risks which are impacting the businesses, companies, and also people at large, namely climate risk, pandemic risk, and cyber risk. These are today, very, very important risks, which is very vital and critical for the society at large. So let me first talk about climate risk. Climate risk, as we all know, has become a serious challenge for the whole world. Global warming and increasing carbon emissions have cast serious doubt on the survival of our own beloved planet. The average temperatures have risen by more than 1% in the last century, and this trend is likely to continue in the future as well. So this, as friends, as you know, is likely to lead to heat waves, floods, cyclones, drought, and also increasing sea levels with the disastrous consequences. I think this is borne out by the number as well as intensity of catastrophe events across the world, as we see, without any exception in all the continents of the world. India particularly is extremely vulnerable to climate change risk. More than 80% of India's population lives in areas which are highly exposed to extreme hydrometeorological disasters. While the risk of flooding is very high in northern, southern and eastern states, the risk of drought is high in southern and western states. Cyclone risk is very high in southern and eastern states. And we have seen in the recent past, the western part of the country is also exposed to the risk of cyclones, which is something, something we are seeing repeatedly in the recent years. We also hear that Himalayan glaciers are melting at a very exceptional rate, and they have lost almost 10 times the ice in the recent years. Global mean sea levels are expected to rise by about 0.5 meter by end of the century, and this can cause problems to many of the Indian cities which are located in the in the coast of both Arabian Sea and Bay of Bengal. We have repeated NatCat events in India the last decade, causing huge losses for the people and also business entities. The insurance industry has also suffered, has borne the brunt of those natural catastrophe events. The challenge of climate risk is further, accentuated in the Indian context because the protection gap is very high, almost 90% in case of NatCat events. This is a serious issue which requires, solutions quickly. So I think the key questions, according to me, are how do we reduce the protection gap? How do we design and market simple NatCat products which can reach people? How can we have innovative risk financing and reinsurance solutions? How insurers can contribute to loss prevention and minimization? Coming to the pandemic risk, which all of us are quite familiar at this point of time, we are hopefully recovering, I would say within inverted commas, from 2 years of the pandemic. COVID had traumatized the world with large number of deaths, hospitalization, and also huge economic impact, which has been disproportionately borne by people at the bottom of the pyramid. The pandemic demonstrated to us how helpless we are despite huge medical advances. And the unfortunate fact is pandemics can happen anytime. No one can predict when it can happen and what would be its intensity. That's the whole challenge. So the insurance sector was affected with huge losses in health and life space. The Indian life insurance companies and general insurance companies, standalone health companies did have huge claims, especially out of the second wave we had seen. Insurers, unfortunately, in the Indian context, I think that's applicable to global as well, had no solution to the business and economic losses due to the pandemic and lockdowns. It's necessary for insurance sector to think of a viable protection to the industries, businesses, and also people, because this situation, whether we like it or not, may happen in future as well. So there's need for new pandemic products and innovative ways of sourcing capacity for these covers. The third risk which we are talking is cyber, which is all of us know is very, very vital, which affects every one of us, even as individually. Technology today is playing a very important role in all walks of life, and the pandemic has also given a fillip to the use of technology. However, this has also resulted in increased cyber attacks, malware attacks, data breaches, and cloud jacking, I think, would be the top cyber risks affecting businesses and individuals. Cybersecurity has now become a key focus area for companies and also for the boards of the companies as well. And also individuals are not, have not been spared by the cyber attacks. Insurers have cyber products, both for individuals as well as for business entities. The key is to understand how comprehensive these covers are. Insurers also need to source adequate capacity for reinsurers and also take care of the aggregation risk, because cyber attacks can result in multiple claims in the same accident. I think these are very, very important risks, important problems concerning the society and also naturally the insurers. I think these interesting themes will be deliberated by an eminent panel of experts during the day. I'm sure the deliberations would be would be useful and very relevant. Once again, I thank Mrs. Alamelu and Ms. Hadi Rayachi and others and all of you for taking your time off and participating in this important event. Thank you very much.
Thank you very much, sir, for the warm welcome and opening remarks. Ladies and gentlemen, I now have the pleasure of introducing the accomplished guest for the inaugural function, Mr. Hadi Rayachi, CEO, Swiss Re India branch. Mr. Rayachi joined the Swiss Re Group in 2015 in Shanghai and was appointed as the market head India of the Swiss Re India branch in April 2020. Based in Mumbai, he is responsible for leading Swiss Re's reinsurance business in India and overseeing all products and solutions for property and casualty, life and health, including innovative, non-traditional as well as public sector solutions. Before this appointment, Mr. Rayachi was head North Africa, based in Zurich, and was leading the development of Swiss Re's reinsurance business in the region. An experienced insurance professional, he has held several important roles in different markets like Oman, Dubai, Singapore, Shanghai, and many more. Mr. Rayachi earned his Bachelor of Science from the American University of Beirut with a specialization in computer science and international affairs. With this brief introduction, I request Mr. Rayachi to kindly come forward and present the special address.
Thank you, Doctor. I have a few slides for our audience to stay with me during the few words that I'd like to share. I hope that they're now visible and everyone can see them.
Sure.
So thank you, Mr. Srinivasan, and thank you, Doctor. So good morning, ladies and gentlemen, and a very warm welcome to all the attendees, the speakers, and our participants today. We're honored and delighted that for the fourth year running, Swiss Re and the National Insurance Academy are co-hosting this seminar. And this year it's titled Mitigating Emerging Risk Through Innovative Risk Solutions. So to put today's discussion in context, I would like to start by sharing with you a perspective on the outlook for the economy and our industry, and then discuss a few of the structural trends that will stay with us in 2022 and 2023. And I hope that this will be, Mr. Srinivasan in his opening address clearly highlighted the three risks that we'd like to address today, climate being one, the pandemic being one, and cyber being one. And hopefully looking at these trends and the structural trends that we identified will help put these in more perspective and allow us to reflect then on the emerging risk landscape and as participants here, as leaders, engage in a constructive dialogue on the role of the insurance industry to be able to create innovative risk solutions and make India more resilient. So let's start with the economic outlook. What we know is that it's positive for the coming year, and India will lead Asia's largest economies in GDP growth. According to the official estimates, India's GDP contracted by 7.3% in 2020. And then we saw a strong recovery in 2021, a recovery to the extent of 8.5% of growth in GDP. And as we look to 2022, we are expecting to grow at 7.7%, as you can see here on the slide. So this recovery is expected to be broadly based on a normalizing private consumer behavior, but also, the consumer behavior coming up, but also on a higher capital expenditure by the government, so which has been clearly articulated and committed to as well in our budget. So if we were to put these numbers in perspective, 2020, 2021 and 2022, in terms of the economic growth that we've seen, I would say that we're really coming off a year of a strong recovery, and that was 2021. And whilst the outlook for the coming year is positive, I think it's fair to say that the strongest recovery momentum is now behind us. And in addition to that, the recovery for the coming year, we expect it to be uneven. And we expect to have risks that will tilt it to the downside. And we'll talk about that today, but also I'll share a bit more on that. We see inflation, we see climate change, and we see supply chain to be just a few of the risks that the world will have to deal with. And if we are to look beyond GDP growth and look at the broader picture, particularly putting the pandemic in perspective, I think it's fair to say that the pandemic has also deeply impacted our societies and economies. It exposed vulnerabilities in supply chains, in infrastructure, in financial markets, and in healthcare. And whilst there was a huge fiscal stimulus across the world, and particularly in India, the Atmanirbhar package, which helped to cushion the blow of the pandemic, the cost to economic resilience remained very dear. And when we look at our global indicators for economic resilience, we've seen it shrink and reduce by 20% in 2021. And so we've seen protection gaps further grow despite the increased awareness that COVID-19 brought upon us. So that's for the outlook. And I think that's where these three structural trends that we've identified will shape the long-term path of the world. And I would like to term these, and the Swiss Re Institute also term these as the 3Ds, and they are the Ds for divergence, for digitalization, and for decarbonization. So let's unpick these together. So let's start by talking about divergence. We should be concerned by the growing divergence within and between the countries in the economic recovery, in the wealth distribution, in the income, and in the socio-economic opportunity. We've seen divergence between regions and divergence between emerging markets and developed markets. And only the top 5% of households globally have seen their wealth grow. Others on the socio-economic ladder have either shrunk or seen their wealth stagnate. And so these divergences make the economic recovery that we just talked about, the 7.7% for India, the 4% globally. These divergences are going to make the economic recovery fragile. So what we need is policies that address the structural drivers of these divergences to be prioritized and to be able to support sustainable growth. So what does this mean for our industry? So we've talked about divergences in the economic context. So for our industry, what we've seen is that the social protection gap has also widened as a result of this divergence. So the pandemic put the global resilience to the test. And the global insurance protection gap, when we look at mortality, we look at health and natural catastrophe combined, has rose by 6.3%. standing at $1.4 trillion in 2020. And if we bring that a bit closer to home, when it comes to the mortality protection gap in India, we see that 83% of households have their protection needs unmet. And if we add to this, and looking at a recent survey, we can see that 72% of the households in India underestimate their protection needs. And so they're potentially exposing surviving family members to livelihood disruptions in the event of losing the main breadwinner in the family. And if I look at health, it's also notable to say that India remains with the largest health protection gap amongst the Asian peers at over $200 billion is what we estimate it to be. So there's a lot for us to do as an industry when we talk about divergence, and the pandemic has exacerbated this. Now let's move on to our second D, and that's the D for digitalization. And so yes, the pandemic has brought challenges, has brought the diversions that we talked about. But the pandemic has also brought about paradigm shifts at the consumer level and at the macroeconomic level. The digital economy in India is booming and driven by young demographics and smartphone adoption and mobile data accessibility. It's driven by investment in online infrastructure, but also very importantly, it's driven by government support. So, if we look at the past 2 years, we see really a growing and visible trend of tech-enabled business models. We see startups and companies building new ecosystems for consumers who have now turned to online for almost all of their needs, whether it's work, education, entertainment, and of course, shopping. And, to back all of this transformation, India's latest budget also focused on giving a boost to the digital economy. And that took place through the announcement of a state-backed digital currency that will be launched. And so digitalization is not only important in the context of the economy, but it's really important for our industry as well. When it comes to insurance, it's really allowing us to rethink our approach on pricing, on distribution, and even managing the entire value chain. And this is critical in the context of India, because what we need to do is we need to be able to democratize insurance by making it more affordable and more accessible to be able to close the protection gaps that we just talked about, that we see them widening as well. So this is really an important D among the 3 Ds that I will talk about today. And more of it will foster economic growth and will help us to close the protection gap and mitigate some of the diversions and the undesirable impact of it that we are identifying. Now, of course, it's topical and we've mentioned it, that cyber remains a great threat, and with the acceleration of adoption of digital, we of course will be more exposed, and we'll see increasing exposure for individuals, for businesses, for society at large to cyber, and so improving cyber resilience at all levels becomes a key challenge for our industry as well. And we need to work to be able to mitigate this risk through the risk knowledge that we have, but of course as well through risk transfer solutions. And now the last D that I would like to talk about is the D for decarbonization. Climate change remains the #1 economic risk. It is the top risk for all of us today. And that's because it's an existential risk for us. Over the past year, we've seen extreme weather events. 2021 was the 4th costliest year in terms of natural catastrophe events since 1970. And so we're seeing more climate events materialize. And so there needs to be a rapid progress on decarbonization. So how we transition to a green economy will define the economic outlook for the world going forward. What I can tell you is it won't be easy, and it will not come without pain, but it is absolutely something that we have to all commit to doing. So in a report last year, and to put in context, what does it mean? What is the impact really of climate change, and actually what is the cost of it? The Swiss Re Institute examined 48 economies that would be impacted by the ongoing effects of climate change. And the result shows that in an extreme scenario, and a very severe scenario where we see the temperature rise by 3.2 degrees, India could lose more than 35% of its total GDP by mid-century. And this is a very worrying picture for us to look at. And the reality is that India is vulnerable to a number of natural catastrophe risks, including flood, earthquake, storm, droughts, and landslides. The incidence of natural catastrophes has increased over the years, and if we look today at the likelihood of a flood occurring, we see it's 8 times higher. The droughts are 13 times higher and more likely to manifest than it was 50 years ago from now. So clearly there's an increasing frequency and a much higher probability of climate events and weather events to materialize, and that's really driven by climate change. So there's no alternative but doing more on the policy front. We need to commit to deliver on the Paris Agreement, on COP26. But more importantly, I think our industry has really a lot to add here to the positive outcome that we all hope to achieve. Because climate change is a systemic risk and is probably the most pressing risk and long-term threat to humanity. And in that context, if I think of the contribution of our industry, we really can be part of the solution here. And we need to be part of the solution through our risk knowledge. We understand natural catastrophe, we understand weather. We can really make a difference in facilitating the transition. We understand the risk itself, so we have underwriting knowledge. We're able to price it, but we're able to transfer that risk and take it and provide protection against it where appropriate. But as well, of course, we also are part of the overall global economic construct. So we are able to be, and we need to be, a responsible and long-term investor. So again, a great threat, but a great role for the insurance industry to contribute to the agenda of decarbonization and the structural trend. So if I'm really to bring it all together and put these 3Ds in perspective now in front of you, here they are. I have a call for action that I'd like to leave us with, and hopefully drive some of the discussions that we have today. On divergence, one, we need more structural reforms, and we need these to be focused on addressing inequality and reducing the permanent scarring in society. Two, we need our industry to work in partnership with public and private sector to close the social protection gap and allow for a more fair and equitable outcome for the people in India. Digitalization, it is a positive, and it can make a huge difference, bringing economic growth and high productivity to our country. But it's also very good to our industry, as we just mentioned. Our industry can leverage the data, the technology, to integrate insurance in customer journeys and deliver products that are tailored to these customers' needs. And third is decarbonization. And we look at this and we see it as the biggest investment opportunity of our lifetime. But really so much more is needed for us to reach the net zero. And as I shared previously, our industry has a crucial role to play here with the NatCat risk knowledge, the risk knowledge matter that we have, the ability to underwrite and price and take on the risk, and the ability to become and be a responsible investor with a long-term view. And so before I conclude, and adding just one point to the 3Ds, and already it came across in divergence, I think the one more risk that should be there in our minds and I'd like to address, and that's the pandemic. Yes, the pandemic remains a risk for us. It's not over until it's over, as I say, and declaring victory early is quite a risk, and we really shouldn't fall in the complacency trap. We've done it before. We fell in various parts of the world, victim to complacency, and we paid a very hefty price. So we need to stay alert on how we're going to navigate the risk of the pandemic. The pandemic taught us also very important lessons, particularly for insurance. The past 2 years have demonstrated that the insurance industry is a very strong shock absorber in times of crisis. And we're able to provide financial relief to households, to businesses and governments, and stay resilient at the same time, even in front of such a calamity and crisis. So yes, the insurance industry is resilient and remained resilient in the face of COVID-19, but alone we're really helpless, and looking at the future and the challenges that we have alone, they will be unsurmountable. So here really my last message to all of us today is, although we're gathered and garnered as industry experts and leaders, the key to progress is partnership. And it will be absolutely critical for insurers to build partnership with public and private sectors and join efforts with other industries to address the emerging risk landscape through the development of innovative risk solutions. So I really hope that this gives you a bit of perspective on how we're looking at the outlook for the coming year, why we're having this discussion today, some insight and perspective on the top 3 risks that Mr. Srinivasan referred to, and also it highlights the importance of our seminar and the discussions that will take place today, which I'm very much looking forward to. So thank you.
Thank you so much, Mr. Riachi, for the insightful address. Ladies and gentlemen, I now take immense pleasure in introducing one of the most renowned personalities of the industry, Madam T.L. Alamelu, member Non-Life IRDAI. Madam Alamelu joined the general insurance industry in year 1983 as a direct recruit officer in the New India Assurance Company. After serving the New India for over 25 years, she joined United India Insurance Company as Deputy General Manager and subsequently got promoted to General Manager in 2012. In October 2016, she returned to the New India Assurance as Director and General Manager, one amongst the youngest directors and general managers in the public sector general insurance companies in India. She was promoted as Chairman cum Managing Director of Agriculture Insurance Company in June 2017, where she served for more than 2 years. She was the first woman CMD of AICL. After serving the general insurance industry for more than 36 years, Madam Alamelu joined IRDAI as member non-life in July 2019. With this brief introduction, I request her to kindly present the keynote address.
Thank you for that introduction, Ruchika. Mr. G. Srinivasan, Director, National Insurance Academy, Mr. Hadi Riachi, CEO, Swiss Re, all the dignitaries and all the insurance stakeholders who are attending this prestigious seminar, a very good morning to all of you. First, I would like to thank the National Insurance Academy for inviting me to deliver this keynote address of this virtual seminar on the topic mitigating emerging risks through innovative risk solutions. Now, to quote Swiss Re themselves, I think we should get to know what is the definition of an emerging risk, and they are those risks that are new or already known but are difficult to assess and which may have a major impact on an organization or the society. So taking that definition, emerging risks are generally associated with new technologies, changing patterns, complex systems, or new contextual situations. They are generally unanticipated and not widely understood. Their potential consequences are also uncertain, and thus the factors which differentiate an emerging risk from a familiar risk is uncertainty of occurrence, impact. Usually impacts are very high and intense. Uncertainty of the timing, we do not know when it will hit us, and they are not fully understood. As more information is generated on emerging risks, they no longer remain strictly emerging in nature, but start acquiring the characteristics of known risks. Thus, the concept of emerging risks is only relative and not absolute. And as insurers, the response would be dynamic. It would keep changing as we come to know more and more about the risks. We collect more data. We know the consequences. Our response also would change as per the data which we get. Now, Mr. Srinivasan spoke about what I would call the 3 C's: climate change, cyber risk, and instead of calling it pandemic, I'll call it COVID-19. So he spoke about 3 C's and Mr. Riachi spoke about 3 D's of diversion, digitalization and decarbonization. So it is in this context that this seminar is being conducted. So I'd also give my perspective of what the 3 C's and 3 D's mean to the insurance industry. Climate changes, lots have been said, not only in this current by the current speakers, but it's been a matter of debate for the last many years. It is manifesting in the form of unpredictable climatic changes, extreme temperatures, unseasonal rains resulting in floods, unnatural storms, etc. And all these incidents result in changes in economic productivity, give rise to unpredictable health conditions and resource scarcity. We are talking about not having enough potable drinking water in the years to come. Then, of course, is the cyber risk. There is a growing dependency on digital system, and that has got intensified in the last 2 years. The remote working for a huge workforce, which had to be done almost like overnight, has left a lot of organizations vulnerable to this particular risk. It has resulted in increased cybersecurity threats, malware, ransomware attacks, and this has increased by 358%. The malware attack 358%, ransomware attack 435%, as stated in the World Economic Forum report of 2022. Then, of course, all of us are currently familiar with what's happening in the COVID-19. The crisis has brought about sharply the protection gaps, not only in health insurance, but also threw up certain other risks which were not anticipated, like Mr. Srinivasan said, the issues of lockdown resulting in loss of profit to business houses, loss of earnings to individuals, to the labor, to the migrant labor, and whole lot of issues were thrown up which we were completely unaware. The importance of having a health insurance or even a term insurance has been continuously highlighted during the pandemic. It has also brought into sharp focus that there is that missing middle, and how a large number of this class of people who had the power to buy insurance, who had disposable income, none of them thought it fit to have an insurance protection, and most of them have spent precious hard-earned savings on hospitalization, on getting their near and dear face this challenge of the pandemic. It has also put back the economy, because most of them have spent so much on it. There is no now purchasing power. So though there is the demand side has gone down, which is now affecting the economy. Had there been a fairly robust insurance protection by at least a whole lot of people, which I can say at least the middle class, probably the economy would have bounced back. Instead of the 7.7%, we might have even looked at a much better number of 8 or 9%, and faster resilience would have been there. Now, coming to the context of these emerging risks and how we are not able to anticipate, I think that's the challenge which the insurers are facing, and I think this is where emerging risks appear daunting, but the insurers should take it as an opportunity for a proactive stance. Most of the time, insurers are reacting, and I think that's where the gap is. A more proactive, more vigilant stand as to how the risks are happening. I mean, even if it's a small risk, if it's traced and tracked, probably a more proactive stance can be taken by the industry. This will not only place them ahead, but will also lead ultimately to a sustainable and resilient insurance market. While there is the traditional way to handle risks by designing products which mitigates them, risk transfer mechanisms, there are also other tools which I will talk about it a bit later, which is just starting to emerge. I think insurers should seriously look at what is happening in the other ecosystems and not just look at this policy probably will address this risk. As far as IRDA is concerned, we have come out with a whole lot of policies with standardized wordings. Some of the policies have a model wording to address many of the emerging risks. The liability policy, it has a model wording for retail customers, and of course for commercial clients it requires a lot of inputs from the customer themselves, and also also from the reinsurers. Therefore, the model policy wordings for the retail, which is available for insurers, can be adapted and modified to suit the customers, because today retail customers are huge. I mean, I think hardly anybody carries cash in their pocket. Even your, the vegetable vendor or your the press wala is willing to take a GPay or Paytm Pay. So I think the risks is just getting multiplied, and there is that much opportunity for the industry to address them. There is also title insurance, which covers not only legal costs for the builders, but there is also a simple policy for the homeowners. To some extent, the natural calamities could be addressed by householders and small MSME, owners or shop owners. We have come out with Bharat Graha Raksha, Sukshma Udyam and Laghu Udyam. Parallelly, we are also talking to the government for some sort of parametric protection for certain, on a pilot basis in certain districts of a state, so that the economic losses due to a climate risk at least can be minimized. Recently, we had also come out with surety bond guidelines, for which there is a huge demand. However, we do understand the concerns raised by insurers that they should have a recourse to their recovery on par with the banks. This aspect has also been taken up with the government, and I can tell you that they have reacted extremely positive on these issues of trying to keep insurers on par with banks and in the IBC code. So I think the industry is having that much of variety and that much of scope to do a lot of insurance and address lot of these emerging risks. Now, the trade credit insurance guidelines have also been revamped. All of you are aware of that. It addresses the gaps which were existing and now covers whole lot of institutions which were earlier not there, like NBFCs, factoring companies. The insurers are also encouraged to file pilot products, use regulatory sandbox to innovate products, and encourage insurers, intermediaries and tech companies to join together to file products. That's been sort of lacking in this regulatory sandbox. As I had earlier stated a little while ago, insurers must use other tools available to deal with the emerging risks. I'm sure all of you are aware that RBI has come out with account aggregator framework, which aims to make financial data, which includes insurance policy, also more accessible through data intermediaries who are called account aggregators. Now, the policyholder can authorize the account aggregator to share his data with insurers and examine their offers, which he will get back from the variety of insurers. He can make an informed choice. Insurers can use this mechanism to make it easier for policyholders for porting, migrating insurance policies, transferring of no claim bonus. This is just to begin with, but probably at a later stage, this account aggregator framework can be made to make things extremely attractive for the, especially the missing middle. The other aspect is, again, which all of you are aware, the health ID card and other facilities facilitated by National Digital Health Mission, which is another tool available for individuals to share their medical information with insurers, who can then suggest appropriate policies, or the individuals can decide which policy would suit them. These tools are fairly new. It has happened in the past, a year or so ago, and I think insurers should use such tools to, that barrier which people have, saying I have to fill up a huge proposal form and then only that proposal form is analyzed. Only then, I can take an insurance product. It makes insurance products formidable. I think that myth is getting shattered because of such ecosystems coming up. I think repeating the same thing, that insurers should take advantage of this, make things more simple for the general public to take policies by using data aggregators, digital health, health declarations. All these have to be done with the consent of the public. And today, with the IT literate general public, which is itself a huge category available, insurers can effectively use them to cover not only the missing middle, but numerous MSMEs and small entrepreneurs who are struggling to protect the wealth which they have so carefully created. The insurers must develop capabilities to identify factors and patterns that have the potential to develop into risks in future, and also the level of their exposure to these risks. Insurers have to evaluate the emerging risks and focus on contributing what factors accelerate, reduce, or affect risks, and developed insurance product to address those risks. I think the insurers are having whole gamut of choices before them. They have the technology to help them. They have their own intelligent workforce, apart from a good distribution channel, good reinsurance support, where this can continually evolve and become something which is which is what is required for the Indian population and for the preservation of this economy and growth of the economy. To conclude, I wish the collaborative efforts of National Insurance Academy and Swiss Re in organizing such a knowledge workshops, and wish them all the best and encourage all stakeholders of the insurance sector in building a resilient insurance system to effectively deal with emerging risks. Thank you.
Thank you so much, ma'am, for a very insightful and inspiring address. Ladies and gentlemen, as we come to the end of the inaugural ceremony, I would request Mr. Ranjit Gangadharan, Chair Professor, Non-Life Insurance at NIA, to express our gratitude to the distinguished speakers of the inaugural session. Sir, over to you.
Good morning to all of you. A very warm welcome. We have just heard very eminent speakers, starting with our director, Mr. G. Srinivasan, then Mr. Hadi Riachi, CEO of Swiss Re India, and of course, Mrs. Alamelu, IRDA member. The topic that has been chosen for this 4th edition of the NIA Swiss Re seminar is a very, very topical one. Of course, everybody knows the kind of risk the world has been facing in the last few years, and the kind of losses which the industry has been facing. To start with, Director Sir Mr. G. Srinivasan touched upon the important aspects related to climate risk, pandemic risk, and cyber risk. He went through the entire gamut of the kind of risk that the industry faces and how it has to be handled. He laid down the path for the seminar going forward. Then we had Mr. Hadi Riachi, CEO of Swiss Re India. He came out with the important aspects of divergence, digitalization, and decarbonization. He talked about the protection gap, especially he threw light on the digital push in Asia and how insurance is to be made more affordable. Also touched upon the important area of the increasing cyber attacks and cyber resilience. With regard to decarbonization, he rightly put it that it is an existential risk, in showing the fact that 2021 has been one of the 4th costliest year in terms of the losses, and also indicated about the worst case scenario when it comes to temperature rising for the entire world. The worst case scenario showing that the temperature could rise by about 3 degrees, and that could be really catastrophic. At the same time, he came out with a very specific call for action on all the 3 Ds. So this is the perspective laid out by Mr. Hadi Riachi. We next had the keynote address by Mrs. Alamelu. As usual, she gave a very good overview of what are the kinds of risks that are being faced. She talked about emerging risks, which are quite uncertain and the impact is quite big. She came out with the 3 Cs and the 3 Ds. 3 Cs, she added that about COVID, of course, the climate risk and cyber risk, and also went through in detail about how IRDA is coming out and been able to handle these issues in the last few years. A lot of partnership with regard to the activities of IRDA and the government. Alamelu Madam also made it very clear that the insurance industry has the responsibility to come out with very innovative risk covers to handle these emerging risks. All in all, for the last nearly 1 hour, we have heard some of the top industry leaders talking to us about the risk. And on behalf of NIA, I would like to thank each and every one of them. And also, I would like to thank the speakers who are we are going to have 3 panel discussions. I'm sure on a relevant topic like this, all these speakers also will be throwing important light on what are the aspects of the different kinds of risks that we are facing, come out with some practical steps which can be followed by the industry. Once again, I would like to thank Director Sir Mr. G. Srinivasan, Mr. Hadi Riachi, and Ms. Alamelu for laying out the context so very beautifully. All of them are very busy, but it's great, and we should, on behalf of NIA, I'd like to personally thank them for coming forward to sort of start off this Swiss Re seminar on the right note. A lot of other colleagues and friends have helped in making this possible. Especially like to thank the press, which has given a lot of publicity to this event. And going forward for the next 4 or 5 hours, when we have these discussions, I'm sure these discussions will be very fruitful, come out with very practical areas of operation. So once again, I would like to thank all of us, all of the people who have contributed to this, making this seminar successful. Thank you. Thank you very much.
Thank you.
Thank you, sir. Ladies and gentlemen, we will now have the first panel discussion on the topic risk mitigation strategies for managing the climate risks and its implications. After a short break of 10 minutes, stay tuned. Our experts have already joined us. So after 10 minutes, we will hear them. Thank you.